Good afternoon, everybody, and welcome back to Markets for Millennials, to our weekly wrap from the week of August 30th to September 3rd. We're heading into the holiday weekend, the 3-day weekend. The markets are closed for the most part on Monday for Labor Day in the U.S. FOREX has different trading hours, Sunday into Monday. And so we'll have an abbreviated week next week. And next week, everybody is going to be coming back from their end of summer vacations. They're going to be taking their positions that they're going to hold through the next couple of months. It's pretty typical for traders to take the last few weeks of August into Labor Day weekend off. And so the question that I have in my head going forward, I should say, is will the price action continue on the dollar to the downside? Will the equity markets continue to the upside? Will some of the movement that we've seen over the last few weeks, if you look here at the DXY, I'll talk more about it in just a moment, but really just since August 20th, August 20th, we had started the day, we kind of opened up firmly, still in this uptrend, kind of on the upper half of the channel to the upside. And over the last 2 weeks, we've really dumped down. We've only had, one significant green bar since the 20th, and a doji, obviously, on August 30th. And so it hasn't been going well for the dollar. We had Jackson Hole take place. Obviously, I had a video update following what was going on there. And so to start out here on the DXY, I had mentioned last week after Jackson Hole that what I was going to be looking for if I dropped down to the 8-hour, let's see, so Jackson Hole would have been somewhere right around here. And we had a big down day right here on August 27th. And what I was looking for was, were we going to get follow through? And I was expecting to come back up. I kind of figured personally that we would come back up and touch this level, or perhaps even this level, because even though I did say that, and I mentioned last week, the dollar got destroyed, we didn't see it come down as far as it maybe could have. It was a more muted drawdown than back earlier in August and so on. And so I wondered what our retest would look like and if we would get any follow through to the downside. With again the caveat that the market volatility is a little bit more muted because the liquidity is not so much. Not as high as normal because, again, traders have been taking the last few weeks off. And so, again, from this candle here, or these two candles, I should say, from August 27th, these 8-hour candles, we had some follow through on the 29th, Sunday night going into Monday. We had a kind of a little bit of a retest, and then we really just started following through, kind of bounced up again, touching that same kind of level, which if you actually think about it, it's kind of a horizontal level right there. You can see it actually is on the left side of my screen. You can see that it's support over there as well. So anyway, suffice to say, we bounced around a little bit there, and then we've had some follow through the last few days. Going back to the daily chart, obviously you can see that here. So this August 27th candle was our big down candle. August 30th was our retest candle, and we've been coming down ever since. And it's at the point now where we've broken the key level. So what I did here was I've got this ascending trend line from our wick low from May 25th, and we've been in this channel to the upside, clone trend lines all the way up. And yesterday on the 2nd, Thursday the 2nd, we closed down below, and then so what I was looking for today is when we close down below, would we get a retest and a resumption down? And for the most part, we did kind of continue to push that momentum downward but this candle is going to end this 8-hour candle is going to end green. And so now that we're at the bottom, and now that we're going to be obviously seeing greater liquidity in the market following the return of traders and investors after Labor Day, what I'm going to look for here is what happens when price comes back up to this lower trend line, because I think it will. I don't think that we're going to see price go just tanking down that quickly. I think that now that we've had this movement to the downside and we broke this channel, I think that we're going to come back up, and it may take a day or two or three. I suspect that we will at least give some kind of test of this trend line by Wednesday of next week, if not Thursday, because I know that we have an abbreviated week. And then the question will be, will it resume or will it break back into the channel to the upside, or will it resume to the downside? And my suspicion is that we're going to go to the downside. I think that, obviously this was a pretty key level. In the long term, like, we've been kind of in this sort of sideways channel. And some people, they've got trend lines kind of to the downside or whatever. But we've really been sideways for a long time, and we spent, a little bit up at the top end of that kind of trading area, in the upper third or so of it. And so I suspect we're going to come down a ways at least. And so I'm looking for us to come down and test somewhere in this area around the 90-25 level. That's what I'm looking for. That's what I think is going to happen. But obviously, I'll adjust my view as the market shows, as the market, adapts and shows what's going on. It's hard to tell because the last 2 weeks of August can be misleading going into Labor Day. And so I'm going to want to be apprised of that. And so if you're already in dollar trades, obviously you don't take the breakout. You wait for the retest and resumption down before you take dollar trades. And so that's something that I would caution about. Don't be so quick. Don't get in a rush to take the trade that you don't wait for the retest, because right now it's not a high probability trade because you haven't gotten the reset or the retest. So that's what's been happening on the DXY, and obviously that has been beneficial, I think, for the equity markets. Let's take a look at yields to start out with. And I posted on Twitter, but I'm going to just show you here. It looked as if going to an 8-hour candle or 8-hour time frame. Let's do this. It looked like we were getting that this ascending yellow trend line that you see here was being respected for the most part by the market. And so you saw it kind of bounce here. I kind of wondered, these couple of candles right here, were they closing? Like, were they more respecting the ascending trend line, or were they respecting the channel cloned trend line? And so if I pull back for a second, you can kind of see those trend lines from kind of the top side here and cloned all the way down. They've provided support and resistance. And so over the last few days, I tweeted about this, and it looked like initially that it was respecting the ascending trend line. But then we obviously came below on the 8-hour, at least. If we go to the daily, we did close below on daily, but then popped right back above it. So it's still not all that clear to me, even though we did wick down just above the descending trend line. It's not all that clear to me still which line the market is respecting. And I actually do think that makes a difference, because if the market is respecting the descending trend lines, then that means that we are on a downtrend. It's just not very, it's not very pronounced. We did have some pronounced downward price action. But if you think about it, we've been making higher lows. And I think that's why I have caution about this price action, because in this kind of a triangle pattern, price could go either direction. So I feel like everyone's expecting, I feel like there's two camps, obviously. Like, there's the camp that says inflation is coming and price is going to, it's going to cause yields to increase, and that the bond bull market is over. But then you're also, there's also the camp that says no, like rates are going to keep going down, the Fed's not going to taper. And at least right now, the second one seems a little bit more likely because I feel like we had a hot, we were expecting a hot jobs number today, and it really disappointed. And so I think, in my opinion, that's the kind of the excuse, maybe we could say, for what we saw at Jackson Hole last weekend for them to say, no, we're not going to taper. By the way, somebody please try to tell me where exactly Powell said that they were going to taper this year. I haven't seen it. I know that they talked about being ready to do it if it was necessary, but I saw no clear indication. But a lot of people are suggesting that they are going to taper, and a lot of people are reading into it that they're going to taper before the end of of 2021. And I just don't see that, honestly. And I think that with the Delta variant out there, I feel like that's one excuse. And then the weak jobs report, I think, or for the month of August, I feel like that is going to be another bit that is going to basically make it untenable for the Fed to taper. And I feel like so much of this movement, like if you think about it, for most of 2021, at least the first half of 2021, everything was moving so hot to the upside that I feel like the markets were pricing in the expectation, not the reality. The expectation being that they thought that the Fed was going to tighten. Everyone seemed to think that it was inevitable. And then go figure, yields are telling us a completely different story than what a lot of people were expecting. And I feel like that's more of the same. That's why I suspect that they're not going to taper, and that's why we're going to see this. Actually, I think what we'll end up seeing is this breaking down. And again, that's why it's so important to really try to make the determination, is this a triangle or is it part of the descending channel? Because if it's a triangle, it could go up or it could go down. Whereas I'm more I believe, if it's more certain that yields are going to continue down if this is actually respecting the trend lines to the downside more than the ascending trend line. That's why it's so pivotal right now, and I'm going to be watching it the first couple of days. And so really, I want to know, over the next couple of 8-hour sessions going into next week, are yields going to get pinned right in here and then break out to one side or the other? Or is it going to be more of a move kind of to the downside and sideways like that? So that's what I'm going to look for on yields. And I think too, if we go to the Nasdaq made new all-time highs. It broke out. I used to have, I think I deleted it, but I used to have a trend line that was, let's see here, how was that? It was something like this, and it broke out of, or it broke down from that, came up, and was rejected again, and then it finally broke above. And it broke above this channel that we have right here that you can see on the screen. And so, again, I feel like I've talked about this before, but just to, again, say, for anybody who hasn't been watching this channel and who hasn't heard about the things that I've said, to me, what we're seeing on price on the Nasdaq, to me, resembles a lot of what we were seeing straight out of the crisis, where we were just grinding higher on the Nasdaq, and it was taking advantage of the situation in yields after the two emergency rate cuts and rates being essentially zero, yields coming down a ton. I feel like we're just seeing that again, and the Nasdaq is the confirmation of that. And that kind of environment was really good for tech. And so to me, low yields were good for tech, and so I feel like they are telling the same story. And that story is that yields are not going to go up anytime soon. And the market doesn't think now. It seems to me that the markets don't think yields are going to go up anytime soon. So what I did was, when I saw this earlier, I think yesterday, I put this kind of, I drew it so it's not a perfectly straight line. But now after breaking out, we're making some kind of pennant. And so it could break to the downside or to the upside. Unless things change, over the next week. I can't imagine that it's going to break to the downside. But, again, with the caveat, like I said earlier, that we're now going to have investors and traders coming back and setting their positions. And really what we're looking at here as we go into the last month of Q3, how do we think investors are going to position themselves going into the holiday season? And if you go back, I'm on the Nasdaq right now, but if you go back to the end of, 2018, you had this first taper tantrum that took place when they actually were tapering and raising rates and stuff like that. And basically from the end of September, you can kind of see at the end of August, we kind of topped, came down, got right back up to that level again on the Nasdaq, and then we just sold down for the rest of the year until basically the end of December. And so I think this was like from the top wick to the bottom wick, almost a 25% pullback. And so I think, there is reason that you could be concerned. And really all that matters is what do like the big investors and traders think is going to happen the rest of the year? Are they spooked at the possibility of a taper? And I don't think that they will be. I don't think it's going to happen this year, at least in this year. Maybe early next year, Q1 or Q2. I just don't see it happening this year. So I suspect that this is going to continue to the upside. Again, strong uptrend, very strong uptrend. Look, I could get a child to come in here and, they would tell me that it's, to the upside. So the Nasdaq is looking good. The S&P, this is, I think, I'm not concerned because it's still, it's still in an uptrend. But I just so you guys understand, I've been really tracking this because I've been saying for a long time, to me, this looks like just a really long wedge. And over the last couple of sessions, I was like, oh, it's breaking above. Oh, it's breaking above, but it can't stay above. And if you look at it on daily, all it is just wicks. It's just wicks above that. And so this resistance is still holding. And I think that's interesting because it's obvious that what is pushing the S&P up is the tech sector. And basically that's it. And so it makes sense that the S&P is moving up, but it's not having the same, it is making new all-time highs, but I find it interesting that it's not getting above this level. And it could be nothing, for all I know, this could just continue to go up, 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 up. But I think that's interesting that it continues to fail to get above that resistance level. That's kind of like the max point that it can get to. The Dow hasn't made a new all-time high since August 16th, so half a month. And I'm not sure if that should be concerning or not. But you can kind of see here we've got kind of this overhead resistance that is being established. It's kind of like that. So I do think that the Dow looks strong. It can underperform and still be strong. That would be just like what happened shortly after the March 2020 crisis. The Dow was coming up. It just wasn't performing at the same rate that the Nasdaq or S&P was. So I think that that's interesting. And then the Russell's been, had a couple of really good solid days. And it's back above this trend line that I've been toying with since the March lows of 2020. Still sideways, but something's got to give soon. And right now it looks like the market wants to go higher. And so we could maybe over the next week or two, probably within the next 2 weeks, we could see this. We could see this come up under the resistance and then pop above, and then at that point you get to the point where all the markets are confirming each other. To me, it's the Russell being the laggard, having not made a new all-time high since March 15th. That has continued to concern me over the last few months. That even though the markets, the S&P, Nasdaq, and Dow are grinding higher, we're not getting that final confirmation from the Russell. And to me, that's more indicative of the actual economic environment, that the Russell, in an asset inflationary environment, assets prices are just skyrocketing for the most part, that the Russell isn't. And so to me, that's been cause for concern. Take a look at gold. Again, as yields continue to consolidate, gold and the dollar has kind of dropped over the last few days. Gold is coming up. We, for now, the third time since coming below this horizontal level, June 16th, 1, 2, maybe the third or fourth time if you want to count this wick. We now have had 3 or 4 attempts to get above this resistance and are right now being rejected once again. So we are above this descending trend line, which was to me the earliest opportunity to take a trade. But I'm not impressed. And I've said this before, I'm not going to be excited about gold until it gets above 1916 in terms of price. Now, if you're buying gold as just a hedge against like catastrophe, then obviously gold at any price is worthy of your purchase. But if you're trading, if you're looking to make something on a trade, this doesn't look attractive until we get up above 1916 because the momentum has been sideways and down for the most part. So again, gold has had a good couple of days, was sideways, but then today was a really good day. Silver had a really, really good day. Look at that. Silver is up over 3%. Came above our descending trend line, which is, again, kind of the first spot to potentially take a trade if you're trading silver. But still not really impressed. We've been ever since, it's been over a year now, and we're still sideways. And on silver and gold until we really get some conviction to the upside, then I'm not going to be excited. Look at Bitcoin. Doomsday, just kidding, not doomsday. I swear, so many, there's already people on the interwebs saying, "Oh, look, it's a Wyckoff." It's not a Wyckoff. But anyway, we had a period of consolidation. There was a lot of concern that we came up, we had a consolidation here, came up, and then came down, and then we came up again and failed to make a higher high there, and made a lower low, and then we wicked up but didn't close higher. Well, we kind of did, I suppose. And we were just kind of consolidating sideways, and then we finally broke out of that, and then now we're kind of back where we were back on August 22nd. And Bitcoin's been doing this a lot the last few days, where in the early morning you'll see Bitcoin up 1,000 or 2,000, and then by the end of the day it kind of gives a lot of it back. So you kind of saw that at September 1st on Wednesday. You saw the price. Well, the last couple of days, I don't remember exactly which day. I have to look again. But you had price, go up, and then you had it give back a lot of its gain, and it looks like you're seeing that again. At one point today, it was trading. It got up to it got up to 51,050. And then we're kind of getting kicked back down again. It looks like it's just a matter of time before we, just really kick it into high gear up here. Let me darken this or make this resistance horizontal level easy to see. That's been a level I've been watching for a long time. You can see it there. And I'm going to get rid of it because I don't like it. And so I think that, again, you have to know your risk. You have to know your levels. There's various things that you can watch if you just look and you follow the crosshairs and the dotted line. Obviously, in this move, you don't want to come below this low right here, this swing low. If you do, then the next level to watch out for is going to be here. And then if you fall below that, the next level is going to be way down here. And so if you look at the levels from where we're at right now, 5.5%, 11%, 23%. And so those are levels that have held approximately so over the last few months or over since the beginning of August or end of July. So those are levels to watch for to the downside. But to me, I feel like there's just too much pressure that is forcing price to the upside. I talked about this on Twitter, and I'm going to show you here if I can get to this. I'm going to go to a line chart, and I'm going to do this. So I've talked about this a little bit, where you have the yellow line being the 2013 bull run from the mid-cycle dip to the peak. The purple line is the 2017 bull run from the mid-cycle dip to the peak. And I've talked about this. We got to stay generally between these two. But then obviously, if I can put, let me see if I can get this up here. But then if you put kind of like this blue box, which is right about here, price should be somewhere in here, between the middle to the end of September. We kind of should see them come to that sort of choke point together. And then price should continue to average the two. And where I'll be worried is if over the next few days, if we don't come up a bit before consolidating into this blue box, if we break below, then that's where I'm going to be a little bit more concerned. So a lot of people are reading what they want to happen into Bitcoin right now, but obviously you can only go off of what price is actually showing you, not on what you want. So one thing I want to show you here, I have my cloned prime trend lines, which again come from this ascending trend line from earlier this year. And they're just cloned right here. You can kind of see how they're respecting this. You can kind of see right here, they're respecting this level up here. And they respected this level to the downside. You can see that it was a level down here that was respected. So that was something I wanted to bring up. So we're still comfortably within range here. And then the other thing I wanted to show you is if you take the most important trend line in crypto, which came from obviously our April peak and then connecting in May, and then it was resistance at the end of July, got rejected, and then we popped above it finally at the beginning of August. If you continue to clone that trend line up, you can actually see how it was resistance, and then we came down and touched it yesterday on the 2nd, and then we finally bounced back up. And so those lines, the market symmetry has been apparent, and you can easily continue to add and clone these lines all the way up, should you so desire. But it is just noise. I don't like to keep the trend lines up because it just makes the chart messy. But you have to be aware of it. So you obviously, like you can eyeball, boom, boom, boom. Obviously they're not perfect, but you can see how it should be pretty easy to eyeball where the resistance is being respected and how that is symmetrical with the most important trend line in crypto. So I actually do think that over the next couple of days, you're going to see Bitcoin pop above. I actually could see us getting pretty close to our all-time high. I said in a video I should go find it and maybe post it on my channel or talk about it in another video. But I said that it wouldn't surprise me at all if between the end of August and the middle of September, if we got back to our all-time high. So that is basically somewhere in this range, right? We need to get back at least touching close to our all-time high. So what I'm looking to see is over the next couple of days and weeks, are we going to get a price move up like this and then come down for a pullback in this box and then take off again for the next move? That's what I'm thinking is going to happen. That's kind of my base case at this particular point in time. But I gotta, at the end of the day, not be married to any sort of view and let price dictate to me what I'm going to do. And so I think that's going to be it for today. I hope you guys enjoyed this. Go ahead and like and subscribe and share with somebody if you found that this was helpful, and I'll see you guys next time.